So I believe the rally. It's happened. It's real. But what I think is more important is putting it in the context of what's happening in the broader market. I believe that since June, we've been in a bottoming process. We are in a massive reconciliation period where we are reconciling 10 years of excessive returns. Don't forget, from 2011 until 2021, we had like a 16% annualized return on the S&P 500. That's compared to its long-term average of 8 to 10%. So what's happening this year? We're reconciling excesses. We're reconciling valuations, risk return profiles, interest rates, the way we spend, the way government spends. And so what we're doing is we're consolidating all of that. So we're going to have pullbacks. We're going to have rallies. I actually find what's happening right now to be very reassuring because to me, this is healthy. And when you're in a bottoming process, you're going to have rallies along the way. You're going to have pullbacks and it's just going to build up and consolidate into a foundation that in the long run, we can ultimately build off of. So when you say, do you believe this rally? Yeah. Do I think this is the start of the next major bull market and a rally that's going to just bring us back to like 4,800? Absolutely not. We have a lot of work to do still. And we're seeing things, right, like tech lose its leadership, energy pick up leadership. Right. We're seeing individual companies bifurcate. So you don't just buy semis or just buy softwares, but you can buy individual companies. So I see this all as an extremely healthy process that the market's undergoing.
All right. So you think it's healthy. Jason Snipe, are you seeing a healthy situation right now? Are you feeling encouraged as Jenny is?
Yeah, a lot of good points already made. I would say this. Last week we saw mega cap tech underperform, right? The numbers weren't, as great as they've been over the last couple quarters. We've steadily seen the slowdown there.
Oh, you all can hear. Okay, we can't hear him on the desk. So, Jason, I'm sorry to cut you off. Please keep going. I'm sorry to cut you off. Here on the desk, we couldn't hear you.
No worries, man. And then I saw, obviously PCE last week was a little bit higher than expected. But I think Joe makes a good point in terms of where is the Fed going from now. We got an article in the Wall Street Journal a couple weeks ago and talking about a potential pivot or a change or a sea change in policy going forward. I do think that happens, but I think we have to continue to pay attention to what they do. There might be some dovish commentary. I think 75 basis points is definitely priced in, and then they'll probably do 50 in December. But we saw also a GDP number that was better than expected last week. So I think there's some headwinds, but I think we're getting closer, obviously, to the end of this policy movement, and we'll kind of slow into 23 and start to see some other companies do well. And I think, as Jenny appropriately mentioned, leadership in other areas. So that tech fallout, where is the cash flow and capital going? I think it's going to other areas, obviously, and we're seeing that with the Dow up 14% this month, which is the best since 1976. So I think there's a lot of things to pay attention to, and we'll be watching very closely.